Good morning, Paul Georgie from Allendale. It's November 4th, 2010. Well, we've got excitement here this morning in the commodity markets again. Things are mostly higher across the board. Macro buying has hit the market again. A lot of that has stemmed from the Fed meeting results yesterday, where they're going to infuse about $600 billion into the system through the first quarter into the second quarter of 2011. These factors have didn't give us an initial reaction overnight, but as the night went on, we've seen money flow coming into commodities, suggesting inflation is the word of the day again, and traders want to own some hard commodities, and therefore they're buying grains and gold as far as that goes. And in that decision, it caused the dollar to weaken. Dollar down sharply here this morning, down 75 points as we speak. Crude oil up 183, gold up $39 after being down sharply yesterday, and the Dow index is up 103 here as we speak. The grain markets, they rallied after yesterday's sell-off and have went up to resistance areas that we've seen last week, up around that 590 area in the December contract of corn, and soybeans went up to the 1250 area, testing that resistance. So we're sitting right on some key resistance areas in corn and soybeans. Wheat has kind of followed the pattern here of these row crops, as with only a 7 to 8 higher market and still staying within this trading range that we've established here for several weeks. Decent wheat breakout point would be around the 725 area. We also had export sales this morning. Most of those numbers were very neutral. We had corn 350 to 700 estimate, came in at 461. Soybeans 800 to 2 million metric tons, came in at 1.62 million metric tons. A negative there was in soybean oil. We had a cancellation of 32,000 tons. Trade was looking for anywhere from 5 to 15, so kind of a reversal in the trend there in the oil demand, because again China is going south to buy their soy oil. They've been buying a lot of oil out of Argentina here recently, and I think that's why we've seen some cancellations in the U.S. Bean oil, which leads you to think that China could cancel some U.S. beans if they ever decided to go into South America. Wheat 400 to 600 was the estimate, came in at 604. So pretty much a neutral report for the corn, soybeans, and wheat. We did have some export business in the wheat yesterday. Japan bought 2 cargoes of U.S. wheat due for January shipment. Overall, I think today's trend in the grain markets will certainly be higher. We're going to try to test these contract highs, or the recent highs that we've seen in the grain markets here probably early today. If we can get through there and we close above those levels, it certainly sets the stage for a move to the corn market up to the $6 initially, and then possibly up into the 625 area as we've been looking for. Our goal still in the nearby bean contracts is $13. So those are items to watch for. In the livestock trade, we had cash cattle trading lower yesterday. Kansas, Texas did trade some cattle at the 97 area, 98 late, which is anywhere from $2 to $3 lower in the cash trade. Product and cutout values were about steady yesterday, just slightly higher in the choice, a little lower in the select. No big shake there. So cattle futures broke through some trend line support. It's going to be key for this thing to turn back higher today if the bulls are going to maintain their strength. Another lower close there could open this door for another $1 to $1.50 lower in the cattle trade pretty easily in the futures. The hog market, we've got cutout values were up again yesterday. I think that was the third or fourth day in a row that we've seen cutout values higher. Packers seem to have a better attitude here this morning. They were willing to buy some hogs at steady to higher money maybe today. So we're starting to see maybe a turn here. It's possible we've seen our seasonal lows. We haven't been totally convinced of that yet, but it looks like there's some possibilities of that. We've seen the futures market rally some yesterday. We need some more follow through here on the upside. The situation with Russia and poultry, where they are going to stop buying U.S. frozen poultry starting January 1, citing some health reasons. The USDA says that is totally groundless, so we'll see how that works out, but initially not a very positive signal for pork, as the demand here in the U.S. is now, the competition has stepped up for turkeys just coming onto the retail counters here for Thanksgiving, and now we've got some more poultry to deal with. So those are issues that the hog industry has got to deal with right now. About the time we turn the corner, we end up getting some negative news. So monitor that very closely. Stay in touch with Allendale. We'll keep you informed the best we can. You can reach us at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.